So Meta had a terrible 2022. However, 2023 so far has been pretty good to the stock, and there's been some good news coming out from this company. And you can see the stock price is clearly reflecting all of this good news, up over 36% in 2 months so far year to date. But guys, it's not all just sunshine and rainbows. Let's not forget where Meta stock was just less than 2 years ago, really. This chart shows a total destruction of wealth from one of the largest and arguably safest investments in the entire world. We were down 55% despite this monster rally that we've seen at the start of 2023. So the question really is, where do we go from here? So here's my perspective. I think that if, all things remain constant, Meta's business was the same as it was, say, a couple of years ago, we actually wouldn't be in that great of a position because of the economic slowdown, because of the ads business in general slowing down. Meta is probably going to face quite a few headwinds for the foreseeable future. So to get investors excited again at this point in the stock, there really had to be some crazy changes, some new initiatives that came into play. And that's kind of what's happening right now. Zuck has been working on some new streams of revenue here for the company. And that's kind of what I want to talk about in today's video. I think there's quite a few interesting catalysts around the corner that could pan out in 2023, which could lead Meta to be, one of the top tier companies once again after it's kind of lost its status the last couple of years. So the first is kind of like, more unfortunate news really. Meta is looking to do thousands of more layoffs. This is after they've already done thousands of layoffs in the past. So while this does result in cost savings, it isn't really great for employee morale. So that's something just to keep in mind. Investors are probably cheering this on because it does mean, more money to the bottom line because there's less costs associated with running the business. But it could have more serious longer term effects. We'll have to wait and see how that pans out. But in combination with this, a huge catalyst or a huge piece of news that just announced recently is Meta Verified. And this is Meta's new initiative here to go after, the subscription model that other companies like Twitter have employed and has seen a lot of success with. Now, this new subscription service is going to be launched very soon across the world. It's going to have a monthly fee of around $10.99 USD or $14.99 if you're going to go on iOS or Android to sign up. And it's essentially going to give you like a credibility or verified badge. Now, based on the popularity that Twitter has seen from their subscription service to pretty much have the same offering, a verified badge, this could be a significant revenue stream for Meta and a pretty high margin revenue stream. There's over 3.5 billion people using, the Facebook platforms every month. That includes Facebook and Instagram. And most of these people won't subscribe to the service. But since the numbers are just so enormous, even a 1% take rate can be significant, ranging from like $411 million to $560 million per month of additional high margin revenue. So yearly, this could be in the range of like $5 to $7 billion of additional revenue. Again, high margin that Meta could pull in from this new initiative. Now looking at Meta's free cash flow, we can see in the most recent quarter, they pulled in nearly $5.3 billion in free cash flow. So Meta Verified can add a good chunk to their bottom line here. So now this was the first major thing I want to talk about. The second thing is potentially even bigger, and this is around Meta kind of indirectly entering the Chinese market. So Tencent is actually rumored to partner with Meta here and start selling their MetaQuest VR headsets very, very soon. What does this mean? Well, this means that Meta will now start getting exposure to China, if this is true, and it's kind of a risk-free play for them because they're not directly operating in China. One of the largest players in China is doing all the work for them, and even if Meta has to pay Tencent a pretty big referral or royalty fee for selling their product, it's still gravy on top. Now at this point, this is still a rumor. There's no truth to it. Neither party has confirmed or denied it. But typically when these pieces of news come out, there is some truth to it. And interestingly enough, Tencent actually recently just announced that they're going to be stopping their initiative with their own VR headsets. So all the more reason this Meta partnership could actually be very, very true. So I don't want to jump the gun with this piece of news or catalyst, but I will say that if this does get confirmed very soon, it could result in a pretty significant rally for the stock because investors are going to realize, hey, this means now that Chinese market, that higher end consumer in China will probably want to purchase the VR headsets, and that could result in some more adoption of their platform, stickiness of their platform, and of course more revenue and cash flow for the company. So 2023, it's only been a couple of months so far, but it's been shaping up to be a strong year for Meta, especially after the terrible year they've had in 2022. And we could see the stock rally quite a bit more from current prices. Remember, we're still down quite a bit from its highs. Some would argue that $1 trillion market cap was overvalued for the company at the time when it was that in 2021. There could be a case for that, but I think with Meta's business model and how much money they generate and how high their margins really are, this could probably be a $1 trillion company once again in the future. Not to also mention that the whole TikTok, them eating up Facebook's market share, I don't think that's really much of a concern because Reels is picking up steam. It is getting sticky. Consumers are starting to like it. And there's a lot of tension around the US with, a possible TikTok ban coming soon. If that does happen, that's just kind of gravy on top here for Meta. So guys, you can see despite their revenue slowing down in 2022, spending was up bigly, and this is what Wall Street is mostly concerned about. And if these tens of billions of dollars in investment return them back hundreds of billions in profit. Good news is on the most recent earnings report, they lowered their guidance for 2023 for spending. So this was music to investors' ears. And then the additional gravy on top was that $40 billion increase in share buyback. In my opinion, Meta is hitting the right notes here for investors. They've become a very friendly shareholder company, and I'm excited to see where this company goes for the rest of 2023. Anyways, guys, hope you enjoyed this video. If you did, hit the like button. Thanks so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.